What's up, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief. This is the show that we do Monday through Friday, 5 days a week. It's to get a good idea as to where the market might be headed next. We use technical analysis. In today's video, we're going to be covering the indices. We're going to be covering stock market indicators, the dollar, bonds, yields, and also commodities. I'm going to try to go through this fairly quickly because I'm getting the video out a little bit later than usual. So let's just go ahead and get right into today's show. All right, welcome back. We're going to start off with the dashboard. What you can see right out of the gate here to your left, the markets haven't really been moving all too much, but we're getting some very interesting price action. So you can see, the Dow's up 64, S&P only down a couple points, NASDAQ down as well. So very small movements, but interesting price action. What I mean by that, we'll talk about when we get into the charts. Energy back at the top, 2.51% lift today, so a pretty powerful move for energy. And guess what? We talked about energy in the last video. The thumbnail said energy, and now we're talking about energy again, and we talked about it before yesterday too as well. Energy has been a strong performer, not to mention also financials. We're seeing the yield curve steepen, continue to steepen. We're seeing the 10-year go higher and the 30-year yield go higher. We'll show you a chart of that, and that could be really why we're seeing the financials and the banking index really start to show some strength there as well. Let's hop into the indices, starting with the S&P 500 first. We're going to go daily time frame, 30-minute time frame for the indices, all right? Daily time frame, we're still here at this area of resistance. Notice we gapped up and then fell down, so resistance is still holding strong. The histogram on the price percent oscillator is kind of going flat to maybe potentially crossing over. Hey, is this just a long kind of turnaround to maybe come back lower to retest the 20-period moving average? Potentially, but as we see it right now, we're still putting in higher lows. So here's a low, here's a higher, and here's a higher, and here's another higher. So is that going to change coming into tomorrow? Maybe, maybe not. We're in OPEX week here, so let's pay close attention. We're not too far off from that $4,000 psychological level, which has been kind of on our sights. Here's the 30-minute time frame. There's two levels that I'm keeping an eye on. This is the SPY. 394 is the area of resistance, and then this looks like a pretty solid area of support right here at 391.50. Yeah, it could, it's a web, so it can move down a little bit past that and so forth, but you can see it act as resistance here, resistance, and finally when it broke through, we saw some really strong strength. That's when we fell into that 394 resistance, and then we pulled back into 391.50 and bounced from there today. So maybe we come retest that level. We also have the 50-period moving up and the 200 sloping up as well. So overall, bullish context. Just keep an eye out for this price action within this channel, 394 to 391.50. If you don't know, you can make trade plans around these key levels. That's why we show you them. All right, so for example, if we, pull down into this tomorrow, I don't know where the futures market is right now, but depends where we open. If we come into this tomorrow, 391.50, you might be able to enter into a position there, have a stop loss below, the green line or the 50 period, depending on what time of day it is. And then it might bounce from that level, and then you could scale out as you get up more towards 394. If we just clear 394 tomorrow, maybe we get, a back test of that. Once resistance breaks, it then becomes a level of support. So there's a couple ways you can play that. All right, let's look at the Dow Jones daily time frame. Still really kind of just trading sideways here. We did click to an all-time high today, so we closed at an all-time high. Longer upper wick. This could be kind of, called an inverted hammer, shooting star, but it's not really that long of an upper wick. I like to see 2 to 3 times the upper wick, the size of the real body, and that's just not what's going on really right here. So really just some sideways action. 31,500 is kind of that area that we're struggling to get above, and now we just kind of cracked above it. We closed at 22 points ahead of that. Price percent oscillator still trending up. It's above 0, so everything's looking strong so far. Let's look at the 30-minute time frame though. You can see how we gapped up, went a little bit higher, and then really kind of just came back down into 315. So the channel to watch out for tomorrow is 316.50 for resistance, 315 for support, and then if we do continue to break down, we still have gaps that have yet to be filled right here, which it's not that long ago, a few trading days ago. And then this would be a good area of support as well to watch out for, 312.50. Let's look at the NASDAQ. We're going to take a look at the Qs on the daily time frame. Look, we're continuing to put in these higher lows, and it's just this ridiculous grind higher and higher. We've seen that many times where, for example, right here, just higher, 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 and then we get hit by just one dramatic down day that wipes out, the price action for multiple weeks at a time. So we got to be mindful of that as we're coming into this upper range of the bull channel. Context is still very bullish here, ladies and gentlemen. So is what it is. Take it for what it is. But just know that, when the range of these candles gets smaller and smaller, and then we're starting to see gap ups and then kind of just, rollovers into these areas of resistance, it's something to take note of because steam could be kind of slowing down here. When you look at the price percent oscillator, it looks like it's about to try to do this bearish crossover, still above zero though. So we've got to keep an eye on that. Here is the cues on the 30-minute time frame. I'm keeping an eye on this blue trend line right here. You can see a bounce from here, and then it just acted as support. Boom, boom, boom. It was almost like algorithmic driven, right? As soon as it comes down to that level, we're buying it back up. Now we closed the last 30-minute candle. We bounced on that area. Its confluence is with 335 level of resistance and support right here. So, let's see how it plays out tomorrow. 50 period moving average, 200 period moving average, still sloping up. So things are looking pretty strong. Resistance is at 338 here on the 30-minute time frame. Russell 2000. This one is, could be considered a bull flag right here, but let's just look at the price action for these last 4 or 5 trading days. Look at these red candles. Just we're getting gap up, then it rolls itself over. Then we get a gap up, rolls itself over. The only day that we got a gap down was the day that the price action went up. So this is just pure chop. And then today, obviously, we had a pretty strong gap up into 330, and then it just rolled over and pretty much closed on the low of the day. So this is still within the bull channel, still within a bullish trend. The gap below us still hasn't got filled. Maybe this is flagging out. We're seeing chop before maybe a more aggressive move. But I will call out the negative divergence on the RSI, and the price percent oscillator does look like it wants to start doing a bearish crossover, still above that zero line. So play with this one carefully. I've been saying, probably from around this point here, I've been saying I wouldn't be going long until a period of consolidation or a pretty dramatic pullback in the IWM. And as of right now, I still would not be going long unless if we see, a little bit less chop and just continued consolidation here for a little bit longer. Now, the 30-minute time frame, call out a couple of things here. Area of resistance is just below 230. So let's call it 229. I'm just going to call it 230 just to round up. Clearly, it acted as resistance here, here, and here. And now we're seeing it. This could be considered a bear flag, pulled down, and then we've been trending sideways. And this red line right here is, let's call it 2650. Clearly, throughout the entire day, it's struggled to get above that. So it's going to be interesting to see how the price action plays out. Going into tomorrow, we did close below the 50 period moving average. So the immediate downside area would be 222 to 23. That could be a strong area of support. That's that gap from here. So if we get that filled, that could be a really good sign. If we just have some crazy day where we gap clearly below it, that could be considered an island reversal pattern, but that would be one big gap down, that's for sure. Now let's look at some stock market indicators. Only going to go over 4 today. 4 indicators. Here we go. CPC, this is the sell signal. Still not crossed above the red line. If you don't know what I'm talking about here, well, if you start watching these videos, you'll see me talking about this sell signal here more frequently. The only thing that I wanted to kind of point out here is the purple line in the background. That is the CPC. The black line is smoothed over a 10-period moving average to kind of, make it look less erratic of movements. But you can just see higher lows, lower highs being built. So it's kind of this compressing pattern. Potentially that might result in some sort of aggressive move in either direction. I don't know. I just wanted to call that out and point it out to you. But if that is compressing, potentially if we break out to the upside, we can see a pretty strong spike, which could bring that 10-period moving average above that 0.8 line, which, if you keep on watching these videos, you'll know because I'll bring it up when it does cross over. Lumber to gold, people have been asking, where is this at on the 13-week? This is where it's at right here on the 13-week. If you don't know what the lumber to gold ratio is, I did an interview with Michael Guyad. You can just look at my channel. I have it posted there somewhere. I'll try to remember to put the link in the description. Good interview, and he talks more about this in detail. If it crosses below zero, that's when we have that risk-off environment. Still, everything says risk on, but we are starting to see a pretty strong pullback so far. Will that continue? Maybe, maybe not. The last time it was up at this level was right around here in 2020, and we did pull back pretty significantly and went into that risk off. You can see right here, we had that little bit of a down pull, but then we continued that ramp higher. And then previous to that, when we crossed below it, that was actually the crash. This has predicted some pretty insane market crashes. So we got to make sure that we're just keeping an eye on this. It doesn't mean that it's predicting the crash. It just lets us know that the conditions for a crash are there. And so, you know, it's been working out quite well. Here's the NYMO, looking at breadth, very weak, 7.71. Negative divergence here, negative divergence there. The VIX, up today, right? Gap up, moved higher, and then got crushed a little bit. This is OPEX week. I would expect to see this head lower, but who knows, right? Who knows at this particular point in time? The gap is still below us, and we're trading a little bit sideways here. So this big move to the upside and then big fall to the downside. Now we're starting to see a little bit of compression take place here and some sideways action, very similar to what we saw right back here in December of 2020 and then early December of 2020 heading into 2021. So we'll keep an eye on the VIX. Let's look at commodities. Got a few to go over. Gold, pretty rough day today, down 24.20. This could be because, well, yields spiked like crazy again. So yields continue to move up, the 10-year, and gold is reacting poorly, trading like a currency here. A lot of people do consider gold to be a currency. Well below the 200 period, well below the 50. I still have a very positive outlook for gold, but as of right now, I am looking at it on the yearly time frame and waiting for it to hit my targets. If you don't know what those are, I'll bring them back onto the video probably at a week's close or at the weekly recap at the end of the week, and I'll try to remember to show you guys that again, but still not there where I would be buying back in again. I did buy down here. That was my last buy, I believe. Or was it over here on this pullback? I can't quite remember, but it was at this lower range of the levels. It was the last time that I purchased some gold. Here's silver. Silver still performing stronger than gold. Here you can see just a flat day today, but there's a lot of price momentum. We are still above the 38.2 fib level, still this kind of cupping pattern. I'm still keeping an eye on the fibs. 25.16 is the 61.8, and the 50 period, the 200 period are still sloping up nicely. Price percent oscillator is still heading sideways, so honestly, it's just really no action in the precious metals, at least, I shouldn't say all the precious metals, but silver and gold as of right now. WTIC, this is the black gold. Look at, I pointed out a chart on Twitter saying that it's probably due for a period of consolidation. Today's candle makes me think, okay, that could be very, possible now. We saw, the gap down, push up, and now we're seeing somewhat of a shooting star type, gravestone type candle here. So we had a strong day, but just keep in mind the context and the look of this, long upper wick, small real body. This could be the period where we see, okay, maybe it takes a little bit of a breather. Doesn't mean for sure, but we are in very bullish context. This breakout right here, it just hasn't taken a breath yet. So chances are it's going to take a breath eventually. And when it does, maybe that's when we see a little bit of a, slower momentum on the energy sector. The energy sector has been performing well, and that could be very well because oil is doing so well as well. Here's Bitcoin, BTC, USD. We have not back tested the breakout here on this big strong candle. We broke out, putting in higher lows, and we're kind of just slowly grinding higher and higher, getting up to that $50,000 level. We've already tapped over it once there. I want to pay close attention to the MACD and how it's kind of like moving higher, but we're kind of losing steam right here. Potentially, this is a rising wedge, and if we do break down below that, maybe that is when we back test to 42,000. Still in very bullish context, and maybe we might bounce from that area if we do break out. However, we've seen breakouts like this kind of happen where it just continues to kind of drift higher and then push higher and then push higher. So something to look out for. My personal opinion, I wouldn't be buying it at this specific level. I'll be looking for a pullback at least to 46,000 or 44,000. If not, I'd say 42,000. But if you buy here at 50,000 when the MACD is kind of crossing over, it's just not the greatest risk versus reward setup right there. It doesn't mean that it can't go higher, but it's just not the greatest setup for me personally. Here's the CRB index. Call out commodities. This is the weekly time frame, so strong start to the week, up 1.28%, running into this wall of resistance here. Look at, so we have tapped here. This was coming into where we stopped right before the February crash. So 2020, you can see we're right up at this level, and now we're right back. Fairly quick turnaround. What's going to happen with the CRB? Are we going to break above this? Are we going to continue to move higher? Or are we going to take a little bit of a breath? RSI is very, very frothy here. The dollar, this is what everyone eyes are on too as well. notice the hammer candle here and then the shooting star candle right here. So you have the long upper wick, right? This, they're just working, it's just a perfect reflection, okay? It's like looking at a reflection in the mirror here. You can see the lower highs, the higher lows on the S&P 500. Sorry, this is the dollar up top. The S&P 500 is at the bottom here. And now we're kind of at this like interesting phase where it looks like the dollar wants to kind of go higher, and this could be putting in a very short-term higher low, okay? So low, higher low. And then right here, this could be potentially coming back down. It's too hard to say. This is still in bullish context. This is in bearish context. But I will say, as far as the dollar's perspective goes, it's trying to get above the 20 period moving average, and that would be a more intermediate to short-term to intermediate term trend, and it's trying to change that right now by putting in this higher low. If we do start moving up, I still think that 92 is going to be the main level that the dollar has to break through. If we can't break through 92, I think the dollar is going to continue to head lower here. If we do break above 92, I think that's short position. I think people are going to want to cover, and that would just add to the buying frenzy if shorts had to cover, because it's a largely shorted position, and that could really squeeze the dollar up higher. So we'll see, and it really depends on how aggressive the move of the dollar is. And I've been saying that, like, you can't just see a trickle kind of up. You want to see some, if the market's going to react, you need to see some pretty aggressive moves take place in the dollar, bonds, yields, etc. Speaking of bonds and yields, look at bonds and yields. 1.3. Now it is back to where we were in March. Okay, actually, it's even above that. Sorry. So this was March right here, and yeah, we're just above that now. It was a 1.2. Now we're at 1.3 in the 10-year, 2.08 for the 30-year, and the curve continues to just get steeper and steeper here, moving up. Interesting stuff. Still relatively low, but you gotta ask yourself, how high can this go until you start seeing, like, for example, Apple, right? Apple. It's going to be interesting to see how Apple responds to this, with yields continue to rise higher and higher if this continues, and various other stocks. Okay, what is the Fed going to do if rates continue to press up higher and higher as they're holding these rates at zero? We've seen recessions take place, or big market pullbacks take place when the curve goes from an inversion to a steepening curve, and we're not seeing any signs of slowing down here. And you got to ask yourself, is this pricing in growth? I mean, I'm sure that when all these lockdowns are removed, we're going to see strong growth come in, but it's not going to make up for the growth that we've already missed out. It can't do that. And I've said this plenty of times where, I'm not going to go buy, more hotel rooms than I would previously just because, the pandemic's over, right? So it's not going to make up for all the time that I would have spent at a hotel or at a casino or a restaurant, okay? It's not going to make up for all that those missed opportunities that they had to sell to us. So, we'll probably see a big influx of people go into those places, and you'll see like strong reporting and whatever the case may be. But you got to understand, like, that's still not real growth. At least in my opinion, it's not making up for what was actually lost right out of the gate. So this to me looks like it's just the bond market's pricing in a lot higher inflation to come. That's what this looks like to me, and it's not moving in a slow manner. This is pretty fast movement. I mean, if you just go back to the March low or the 2021, look at it. We're up from 0.9 to 1.3 in the 10-year. So what are we up 40% in a year? I don't know. I'd have to do that math, but that's a large percentage point move in the beginning of the year so far. And you look at bonds, we called out this big volume day, plow to the downside. We called out this big volume day. That was when it went plow to the downside. We thought maybe because it was at the bottom of the channel, we might see it go up. Nope. It fell down. Now I kind of marked out this area, this zone of support from 145 to 148. Reason why is because that was where we saw the big boom to the downside there in March, and now the price action's coming back into those levels. And clearly it acted as support here, and then it also acted as resistance here. So I just marked out this kind of zone to see what takes place if the TLH were to come back into here. RSI is oversold. It was a bullish divergence. That got destroyed by today's price action. All right, that's all I got for you on today's video. Okay, I marked out some key levels on the 30-minute time frames that I want to keep an eye on. I'm looking at various different stocks throughout the day to see maybe what I should be trading. Overall context right now, what I'm personally thinking looking at the various charts and where we stand as far as a price action perspective, there's just nothing that stands out to me right now, other than energy has been looking really good, okay, for the sector, and we can find out individual stocks there. But to me, we're at the upper range of these channels. Yeah, we're in bullish context, but we haven't seen the consolidation or a slight pullback into another area of support that leads me to want to just jump into any one particular stock or the markets as of a whole right now. So as we continue to just drift higher and higher, my brakes are being pumped right now. And I'm just playing with extreme caution because I know that opportunities will present themselves. And this is going to be a time where a lot of opportunities do present themselves, but you need to just be patient and wait for that opportunity to come. That's all I got for you on today's episode. See you tomorrow.